Hi friends, welcome to the weekly Roundup. There are broadly 4 updates this time. Let's begin with the global news. The collapse of Silicon Valley Bank could just be the start of a slow-rolling crisis in the US financial system, with more seizures and shutdowns coming. The chief executive of the world's largest asset manager, Larry Fink of BlackRock, mentioned. He also predicted in a letter to investors and company bosses that inflation would persist and rates continue to rise, trends that both contributed to the SVB's collapse. However, other leading financial figures warned that the instability brewing in the European banking sector could pose an even bigger threat to global market stability. But how did the domestic market react to the global factors? After the significant fall in the markets, which was caused majorly due to the failure of the Silicon Valley Bank and the closure of the New York-based Signature Bank, Indian shares opened higher on Friday, tracking a rebound in global equities after a slew of measures to support the global banking system eased worries about a crisis in the financial sector. The rise in domestic equities follows a sharp rebound in the US and European markets on Thursday, on news that a large group of banks was infusing cash into the US lender, which is the First Republic Bank, alongside a lifeline from Swiss National Bank in favor of Credit Suisse. The European Central Bank on Thursday also announced a further rate hike of 50 basis points, signaling it is ready to supply liquidity to banks if needed, amid recent turmoil in the banking sector. The ECB had signaled for several weeks that it would be raising rates again at its March meeting, as inflation across the 20-member region remains sharply above the targeted level. In February, preliminary data showed headline inflation at 8.5%, which was well above the central bank's target of 2%. And finally, India's retail inflation declined marginally to 6.44% on a YoY in February, as against 6.52% in January, as per the data released by the Ministry of Statistics and Program Implementation on Monday. The sequential inflation decline of 0.17% suggests that while inflation is still above the RBI's tolerable limit of between 2 and 6%, but there has been some decline at the margin. With that, we are signing off for this week. All the very best. Have a great weekend. Speak to you same time next week. Bye-bye.